Hello, and welcome again to another edition of Analyst Insights. On this program, we are discussing all issues markets, economics, and business. Obviously, our focus will be on our local capital markets. And today, I'm joined by my colleague, Rufaro. Welcome to Analyst Insights, Rufaro.
Thanks for having me, Nanga.
Good. So there are quite a number of issues that we need to discuss. Maybe before we dive into the markets, let's just look at the major macroeconomic developments that are taking place. I think one key thing that has actually come out in the last week or two has been this trend towards farmers being given incentives in one form or another, and most of that incentive is actually coming in the form of US dollars. I think last week we saw that maize growers were going to get a $90 per ton sort of incentives for early delivery, and we've also seen even cotton farmers this week also getting something like $75 per bale as an incentive. Maybe I just want to get your views on this. What do you make of this development and this whole issue about how farmers are paid or incentivized? Is it good, or is that the best model available?
So I think what we're seeing, and it didn't start with these incentives to farmers. I think it began with a US dollar COVID allowance for civil servants in general, and it's now percolated to farmers. And what it is simply is as the value of the Zim dollar has deteriorated on account of high inflation, and in acknowledgement of the outlook for inflation, and the increasing dollarization of the economy. Basically, this is a tacit admission by the government that, notwithstanding all the policy action they've taken to build confidence in the Zim dollar and to make people more comfortable with Zim dollars and use them more, the reality on the ground is that people prefer US dollars, and hence will likely be incentivized by a payout in US dollars. And if this trend continues, basically through their own policy actions in these incentives and allowances and other payments that they're making in US dollars, they're actually reducing confidence in the Zim dollar, and more of our economy will transact in US dollars, and eventually it's not difficult to imagine beyond the horizon a scenario where almost nobody is using Zim dollars and we are dollarized again.
Yeah, and talking about that again in the news, we saw that the Bulawayo City Council has actually resorted to billing the Bulawayo residents in United States dollars, and they're saying that's just a way of managing the inflationary pressures. So increasingly, a number of people are moving towards using the US dollars. But maybe the question is, so what's the future for the local currency, given the policy position that the Zim dollar has to be supported at all costs, and obviously the fears that if we move to full dollarization, some of the projects, infrastructure projects that are already taking place right now, could be affected. But is this fear warranted, given what we are seeing in terms of the size of the US dollar economy? I think last week we were discussing the fact that businesses like Deltas and OK are seeing maybe 60% of their revenue in being US dollars. So is this fear that maybe if we fully dollarize, the economy is going to suffer justified? Or maybe what we are seeing in the economy already is pointing to a situation where the US dollar is actually able to sustain transactions at a certain level?
Yeah, I don't think the fear is justified. I think that there's been a lot of growth in the informal US dollar side of the economy. Perhaps there's more growth there because the players in that space are able to plan and develop their businesses without the uncertainties around Zim dollars. So If anything, I think that, and even if from a government spending perspective, if you go back to the days of the GNU, government collected about $4 billion a year. If we were to fully dollarize, I suspect that they will be able to collect similar amounts and through economic growth actually grow their revenue, and they would actually be able to spend more. And also in a dollarized environment, for long-term projects like dams, bridges, and roads, infrastructure in general, they would actually be able to then tap into global capital markets and raise the money for such projects directly, through public-private partnerships and other smart structures. So their capacity to actually increase spend and take on bigger, more ambitious projects in a dollar regime would actually be significantly higher than it is now. Because today, if they are commissioning a new infrastructure project, every contractor on that project needs to scratch their head and understand whether they're going to be paid in US dollars or in local currency, and how they're going to fund the US dollar component of that infrastructure project. So so projects are not happening as quickly as they would otherwise if these questions and uncertainties didn't exist. So I think that a transition to US dollars would be beneficial. Having said that, if the government is serious about having a local currency, then it's incumbent upon them to build faith and confidence in this currency by not recklessly increasing money supply, by exercising fiscal discipline, living within their means, because the inflationary pressure is coming from money supply growth, is coming from excessive government spending of that local currency. So if they insist that this is the future where we will always have a local currency, then it's incumbent on them to build faith and confidence, which is unfortunately not happening at this juncture.
And talking about the inflationary pressures, I know last week when we were discussing, I think the rate was in its 500, there about maybe 550, and right now it's actually above 600 on the alternative markets, and the interbank or the willing buyer, willing seller, and the auction rate is slowly moving, but around 330 thereabouts.
338, 340.
Yeah, 338, 348. And maybe I think one of the big problems that we are now facing is to do with shortages, like food shortages, especially for Zim dollar priced kind of goods. So there's an element, one of shortages, but there's also the rising prices. So from where you're sitting, what do you think should be the right path to follow? Do you think we should continue on the path of a Zim dollar alongside the US dollars, or maybe there is merit in fully dollarizing for a bit and try to stabilize things a little bit before
I think if we insist on using a Zim dollar and we don't want to see shortages of goods and services priced in Zim dollars, then the exchange rate must be realistic. And for me, the standard for realistic is, can you walk into a bank and get as much foreign currency at that price? And the fact that you can be in a queue to get US dollars for several weeks at whether we call it the interbank or the auction rate, whatever the official rate is, it tells us that it's an artificial rate. It's not a spot rate. It's got all sorts of challenges. So as long as we're using an artificial rate, which overprices the Zim dollar, anything that is priced at a significant discount to fair market value will enjoy artificially high demand, and there'll be a shortage. So there is a shortage of US dollars at 340 because the price is wrong. So I think the way to deal with that is actually open up the price discovery mechanism to market forces, and then the market will regulate itself.
Okay. Maybe just going into sort of a different area, some positive news where in the papers are saying the tourism receipts are expected to jump by 10%. And I think there was another report saying Montclair is seeing increased occupancy. And on some private discussion that I've had with a colleague, he seems to suggest that the tourism sector is actually picking in a way, obviously coming off a low base. They think that the sector as a whole could actually surpass the performance of 2019. So I just want to what extent sectors such as tourism are critical in sort of boosting economic activity, and maybe obviously what do we need to do to make our product even more attractive. I think today in social media there's a lot of buzz about some developments at a local hotel group where they are struggling with being able to provide water, heated, proper water reticulation for their guests. And it's something that's actually keep coming, that those kind of basic services actually in some properties are coming under increasing pressure. What's your assessment of the local tourism sector, and what could be the driver behind the increasing receipts and also expectation of increased occupancies?
So I think that, if you think about our resorts and destinations from a natural perspective, they're world class. Some of them are unique, like the Victoria Falls. And so in terms of the baseline, we already have a very strong competitive advantage in the tourism space, in that we have these natural features in our country that are attractive to tourists. Layered on top of that is then the tourism infrastructure, which is broken on many levels in terms of, situations like what you've described, a 5-star hotel that charges more than $100 per night, per room, telling its guests that if they want hot water, they should
use the bucket.
They should request a bucket from the hotel. The fact that we don't have robust local aviation. I think there was a recent announcement that there are flights now between Harare and Kariba, but compared to other markets like South Africa, where not only are there flights to most of the destinations, they are there every day, many times a day, and they're also very competitively priced. What you'll find in our country is that a flight from Harare to Vic Falls is quite expensive compared to similar distances in South Africa. So our tourism sector has potential to be a massive earner of forex, and also what you'll find is that the demographic that tends to travel internationally tends to overlap quite a lot with your investor class. So if somebody is here on holiday and they spend a bit of time getting a sense for how things are working in the country, they might be tempted, based on their observations, to come back on a second visit to do business.
Okay.
And one of the challenges that tourists have, which will also affect business people looking to invest in our country, is the currency issue. So when you visit a hotel or a resort, because of the exchange rate regime, some of the US dollar pricing makes us uncompetitive compared to other destinations in the region. So, from access to cash to being able to pay and that sort of thing, that's also a big hoop that every foreign visitor has to jump through. So I think we've got tremendous potential, but we are we're punching below our weight because we don't have great infrastructure, and we also have a very punitive exchange control regime, because if you're using the official rate to price things in hotels and resorts, then we become a very expensive destination.
Okay. And going to the markets, we keep getting these kind of reports which seems to suggest that there's something wrong whenever the stock exchanges is performing, or maybe it's on a rally. So this week there was a report in one of the dailies saying the Zimbabwe Stock Exchange is a recipe for disaster, especially when it starts moving up, and all the inflationary inflation hedging kind of mechanism that people deploy. What do you make of such statements?
Yeah, I think it's, I don't know what the motivation of the author of that piece is, but I think they don't really understand the purpose of capital markets and how they work. I think that it's actually a very good thing that in a hyperinflationary environment, individuals, institutions, and corporates have a destination to ring fence their hard-earned Zim dollars from the vagaries of inflation, like the stock market, and it's perfectly legal, and it contributes to the fiscus in terms of all the taxes that are associated with the transactions there. You know, basically, if you don't have a legal destination like the Zimbabwe Stock Exchange, then a lot more of people's savings will end up on the power market and in other illicit and informal activities. So I don't see, that's the whole point of capital markets. It's for people. The biggest players on the ZSE have always been pension funds. These are institutions that are taking a long-term view for people's retirement savings. So I think that as long as the ZSE is open and trading and is a sponge for Zim dollars, I think it's a positive thing for our country.
Maybe just to put you on the spot, what do you expect will happen between the US dollar and the stock market maybe in the next 2 weeks? Those two tends to be like competing against each other in terms of the movements, or maybe it's because of the flows that come in. Could I either go to the stock market or to the power market? What do you expect? What's the likely scenario in the next 2 weeks or so? So
my view in the next 2 weeks, in the next 3 to 6 months, in fact, until possibly after the election, is that the ZSE is going to lag the power market because of the statements made by policymakers that have been demonizing some of the activity on the ZSE. What you'll find is that a lot of people and companies who were comfortable parking their savings on the ZSE will be a bit reticent in doing so. The regulatory risk of a new withholding tax or some other regulatory action that slows down the velocity of trading on the ZSE is much, much higher. And so if there is significant risk that sometime in the short term it might be harder to sell shares and get value, then a lot of people are going to be reluctant to park their savings on the market. So the demand that was driving this rally, I think, will cool. And I think, sadly, a lot more money is just going to go directly into the power market because, say what you will about the power market, people feel very comfortable with the cash that they have in their safes or under their pillows. And the capacity of the regulator to disrupt or disturb the value of cash is very limited. So, if anything, in an uncertain regulatory environment, the pressure for people to hold their savings in US dollars is actually going to go up. So, I think that the stock market is going to lag the power market significantly in the short term.
On that note, we bring this show to an end. Thanks so much, Rufaro, for those views. And for our viewers, we want to hear what you think about everything that we've discussed. So please leave your comments on our social media platforms, and also remember to like our Facebook page, that is ZFN Capital, and also subscribe to our YouTube channel. And we hope to catch up with you in our next episode. Otherwise, bye-bye for now.